Where is InsurTech headed next? This is where indie agents own the answer. Welcome to the Vertafore Insurance Podcast. Let's go. Welcome back to another episode of the Vertafore Insurance Podcast. Today I have a very special guest, somebody that I'm actually meeting for the very first time on this podcast. I think we've had a total of like 15 LinkedIn messages. So you and I are going to be getting to know Adam Bowe together. Just a little background on Adam. He is the co-founder and CEO of Cake. And if you're not familiar with Cake, they are, you're going to learn a little bit about who they are, but broad strokes, an InsurTech M&A marketplace. And I would say something that is the first of its kind in the insurance industry. So I'm pretty excited to hear a little bit about what they have going on and have you guys get to know Adam and why he started this crazy, or I should say executed on this crazy idea that is Cake. So with that, welcome, Adam.
Yeah, thank you so much. I'm happy to be here. Really excited to, like you said, meet you in person and get into the conversation. It's going to be exciting.
Sweet. Okay, so let's start pre-Cake. Give me the background on Adam Bowe. Who is Adam?
A little bit of a weirdo. No, but it's
Aren't we all?
I came from I'm born and raised in Kentucky. Went to school in Dayton, Ohio. Got a little bit outside of Kentucky, but stayed kind of close and eventually landed in manufacturing with a company called Big Ass Fans. After that, I stayed in manufacturing with Xometry. Used to be known as Make Time. So it was a local technology marketplace within Lexington. Was acquired by Xometry, who ultimately that team was ingested, and we stayed on and built it towards an IPO. So had a really fun ride there. And then, after the IPO, John and my co-founder, John Clemens, and I, we're kind of looking to get into our next thing and stumbled on insurance, and we'll get in a little bit into the idea stage, but ultimately led us to Cake. So have stayed kind of in the backbone industries is what I describe it. You look at like manufacturing, insurance. I think like banking falls in there, but I'm obsessed with the intersection of technology and kind of legacy or backbone industries, and how those two intersect and how we build to make those better.
Yeah. So I didn't realize that you're kind of a unicorn. Most people in the insurance industry are, born and raised in it, can't get out of it, et cetera, et cetera. Yeah. Very few people luck themselves into the industry. It's kind of a small hidden gem, I would say. But I love that because I think you bring a different perspective, a fresh perspective, and now the pieces are kind of coming together as far as why you decided to take on, this kind of crazy challenge of an InsurTech M&A sort of marketplace. Tell me a little bit about you said there's a little bit of a ideas stage there. So you guys, yeah.
So, we were, I think there are different skill sets for different stages of a business. And like I said, after the IPO, it was really cool. I view my career a little bit like my active MBA, I think you just learn more in the real world. And so I was really excited to be reporting to the street kind of deal. And then I realized that, you're kind of tightening nuts and bolts there. You're not building huge, change in the industries. And so we were wanting to get back to the early stages. And there's a guy in Lexington, Kentucky, who's our angel investor and is just integral to the product. His name's Brooks Smith, and he's got his fingers in a lot of different stuff. And we were getting lunch, and I was like, hey, Brooke, because he's invested in all types of startups and industries. And I was like, Brooke, how did you make your money? And I've known him for a few years, so I wasn't just first meeting, hey, Brooke, tell me your money story. But he told me he sold one of the largest surety agencies in the country to Accusure a while back, and he was one of the first acquisitions from Accusure. And outside the industry, you were talking about hidden gem. I thought insurance policies were like a can of soup in the grocery store. Like, oh, I need like
Those
a
are some
commercial.
fighting words in the insurance industry.
I know,
sir.
right? I know. Well, it's true. Like outside in, I was like, oh, I need a bot policy. So I go in and grab one. And I thought like, it was kind of a just standard, there was just a product on the shelf and that's what you were selling. And so I had no idea that insurance agencies were transacting. I didn't know that they were transacting for that much or that frequently, right? And I also didn't know a ton about the intricacies of the industry. So I was like, oh my God, Brooke, I had no idea, like I said, that they were transacting for that much. But then we started drilling down and we were like, okay, Brooke, fifth largest surety agency in the country.
Mm-hmm.
If he wants to sell, he had a few buyers lined up and could sell pretty easily through kind of the standard channels that existed in the space, right?
Mm-hmm.
Accusure Hub, PE groups.
Mm-hmm.
He had a lot of options. But I think that the core of what made that asset valuable holds true for almost every agency. But the options on the table for agencies of different sizes varies dramatically. And so that's where the idea stage got in, is that we started digging into some of the opportunities when it comes to retirement or for inorganic growth for agencies of different size by making that acquisition. And what you find is that, and shout out Carrie Wallace, she's done a great job on this data. This data is kind of available at a few different spots, but she gives a great view of it. Is like 84% of agencies make less than $1.25 million a year in ARR. And that starts to be the ceiling for like when regional brokers will represent you in that transaction, or like kind of the target audience or the target kind of ideal agency for, let's say, like a Brown & Brown or a Gallagher, right? Like they're not really swimming in a lane much lower than that on the revenue size. And then if you drill down even further, almost 35% of agencies make less than $150,000 a year in annual revenue. And so again, these regional brokers, they're often, people intensive process. So when I say broker, I mean someone brokering an M&A transaction. So it takes almost more work to do a $200,000 agency than it does a $2 million agency, right? So the macroeconomics for them starts to break down, like their P&L or like the way they run their business. It starts to break down if they go too small on the agency side. And then you look at the age of the agent, and 17% are 66 or older. The largest share of book management by older producers is in that smaller agency revenue size. So you have, the gray wave, the silver tsunami, the whatever there's a lot of fun names for it, but you have a huge portion across all industries of folks that are going to need to retire, going to need to transact on their business. And you have a lot of kind of tool gap or support gap for the smaller agencies, the Main Street agencies. And like I said, we've got a lot of robust experience building transactional marketplace solutions that attach to those legacy industries, those backbone industries. And it seemed like a perfect marriage. So like, it just, I have to believe in what I'm doing. And for me, like the belief of honoring the hard work of the agent over the course of their career by getting the maximum value for that book of business, but then also giving tools for inorganic growth or like strategic growth for agents to be on the buy side. It's not, you don't have to trick yourself to believe in that, to get out of bed in the morning and be excited about what you're doing. But yeah, it's been the education course, from insurance policies are a can of soup that you just pick off the shelf to like the understanding that I have now 18 months later, which is still, rudimentary comparatively to a lot of folks in the industry. I love it. It's such a cool and interesting industry, and being able to support independent agents is something you can get behind.
Yeah, absolutely. So Okay, so let me ask a couple clarifying questions on your breakdown of the M&A space, just so we can better understand
Yeah, 100%.
how Kate, because I get the why now. I'm with you 100%. I love that that's your mission. I think it's beautiful. The how is what I'm really interested in, right? So first, do you know for that 35%, right? That's under the $1.5 million
Well, it's
threshold.
35% is under
150.
$150,000 in revenue.
Okay.
84% make less than $1.25 million a year in
Okay.
annual revenue.
So somewhere between the 35 and 80-ish% where the big brokers give up and say macroeconomics don't make sense here,
Yeah.
right? Wherever that line is, what's happening to the agencies below that ceiling, or I should say maybe foundation today? Where are they going? Or is it a situation where no, they can sell to PE or to larger agencies, but the valuation is not going to be in their favor, right? Just because the buyer has to make up for whatever loss they're going to have from a logistics and operational perspective. Like, how is that working?
Yeah. Well, I think it's a couple different ways. Like one, you have folks that, I name checked Carrie. Like Carrie's willing to and targets those agents to help them, right? But you got to be able to find those resources and you got to start to work with them. I think what happens a lot of times is backroom deals. So like an agent locally, through Big I or through some industry connection, and you approach them at the end of that your career and say, hey, I'm looking to get out, would you want this, right? And then you kind of through like trust or kind of together try to find some valuation, right? I think one of the worst kind of case, right, is that an agent feels like this talks a little bit about like the mindset of the agent, because I just went through 101 Weston Labs InsurTech Accelerator.
Yes. Woo. Shout out, by the way, shout out to Weston Labs and everything North Carolina is doing. Awesome stuff.
Yeah. Avi and Pat did an incredible job.
Yes.
But it was cool because like a lot of the InsurTechs that were going through that, they have more, they're trying to target agents to use their technology to make their agency better. And we were talking to them about, if you say, hey, my technology will allow you to replace talent on your team and run a more efficient, business that way, agents aren't going to buy it because they love their team and they're like, I'm not looking to shed team or talent, right? If you say that my technology will make your people more effective, and then they can grow in their career, right? Like that. That messaging hits. And so similarly, an agent will say, man, I don't know how I can transact, right? And I feel like I just need to keep working until, I kind of drop, right? Because they feel trapped because they want to take care of their team. And then I think, it becomes a little bit of a panic sale because they work so long until you have agents staying on until 75, 80, something like that, right? And then it's like they kind of have to sell because there's a health issue or they have to retire. And again, I think that falls back on relationships, or if they happen to find those PE groups. Now they can transact with some like PE back, because PE back is changing, I think, a little bit. A lot of times what they're doing now is trying to find a flagship agency and then do bolt on work. So they'll roll up smaller books and bolt it on to that agency. But again, I think you start to get into, they're not really trying to ingest talent in that situation. They're not looking to keep the physical location of that office, right? If you've got walk-in customers, so it can, like, their willingness, what they're willing to buy, right, can like pinch and pinch and pinch, and then that valuation happens. So, I think it's more of just you can transact. It's just a labor intensive process because you have to find the buyer and the seller have to meet. And then oftentimes, you've got to have your full suite of financial data and reports and all that kind of clean and ready to go.
Yep.
And so what you end up having to do is that you've got especially if an agent's on the buy side, they're now a producer, a small business owner, and the head of an M&A department, which is a lot of hats to wear.
Yeah.
And then the seller, has to continue maintenance on that book and growth on that book, hopefully, because the moment your book stops growing, that valuation starts to creep down. So you've got to maintain that fire for selling, you've got to maintain that fire for running that business, and you have to source those buyers, right? So I think ultimately, like where a marketplace fits in is not that it's impossible to do it. It's just very friction filled and kind of it's a hard process to figure out, without the education kind of at your fingertips.
Yeah. Yeah. So without going into, because look, I know we're in the insurtech space, which means it's easy to talk about what will be, what could be, what should be, future state. And I do want to get into that because I can already tell you have a big vision for where you want to take Cake, but just narrowing that scope to what you guys do today. So how are you solving that problem down market, right? How are you helping the 35 to let's say 60, 70% of agencies who fall below the 1.25 million find that seller or find that buyer, right? And is it just the connection that you're making? Is it more than that? How's it alleviating the labor costs of, or the labor intensive costs of, doing a deal? What does that look like?
Yeah, great question. So our hypothesis going into this that has played out is that because there are like listing sites and there are like channels you can go through, right? But they need a ton of information up front, and it's hard to organize, gather, collect all that, suss it out that it's all there, right? So what we talked to buyers about was like, what's the minimum amount of information that you need to know to know if this is interesting for you or not, right? Hey, I'm interested in a conversation with the seller, or doesn't fit kind of my strategy or what I want to ingest. And then from a seller, like, what's the information that you kind of know off the top of your head, right? Like, your business, you are the expert in your business, right? And that's something I always want to honor. And so what Cake does is allow you to list your book or a fraction of your book of business. It can either by carrier, by line of business, by state. But it's listing with like, very kind of information that by heart. It's your total premium, your carrier, state, line of business, number of customers, number of policies, right? So you can very quickly and easily create a listing that says this is kind of represents what I'm looking to sell, right? And then buyers are able to view that, but they're able to view that in an anonymous way. So the seller doesn't have to say Adam Bowe is selling, right?
It
would be like Game of Thrones fan 101 is looking to sell this portion of my book or this full book. And then buyers are able to chat with that seller in a private chat setting and ask additional questions, right? And I'll touch on kind of why we've made it a little flexible in a second, but so they can ask those additional questions. And then we also have a deal room product, and the deal room product is NDA locked, right? And you can invite legal teams, you can invite accounting teams, but it allows you to have a secure place to exchange that data. So you can track who views it, you can anonymize that data, right? So you don't have to put like your customer's name and home address in there, but you can expose the policy level details to provide some comfort for that buyer. That what they are potentially buying, right, actually makes sense. Now that's where we stop. So we don't actually do the full money change hands and transactions there. Second layer to that, if we've surrounded ourselves with like the right service providers, right? So Carrie Wallace, I talked about her at Agency Focus. She helps both buyers and sellers with valuations. She also helps with like strategic advice, and she's a strategic partner of Cake. And so the flow there is that John, my co-founder, was the head of data and algorithms at Xometry and is just an incredibly, talented and bright scientist. And so he's built a book of business valuation tool where those same data points.
I was going to ask about that. Like, are
Yeah.
people self-valuating here?
Yeah.
Or how does that work? Yeah.
Yeah, so those same data points, those kind of 6 data points that I talked about to create a listing,
Yep.
can provide you with a low, a median, and a high valuation. Now, the thing, it's very quick and easy to get that valuation through those 6 data points, and it's quick and easy because what we've done is we've gathered a ton of industry data to provide, kind of low, median, and high performance around like carriers, lines of businesses, states, right? Like regions, whatever. But we're making assumptions there that says we think you fall within, the bell curve, within the gut of the bell curve, on this performance, right? So if that is true, then this low, median, and high gives you a great grounding point, right? Now, if you're on the outer edges of the bell curve, right, then, you might swing that valuation a little higher, a little lower. But that's where we layer also in, carry as well to say if you want a more dollars and cents valuation, you can go through the more robust process, right? But like the quick book of business valuation just gives you like a grounding point to like, because I think that's a big fear for sellers is like, I have no idea what this asset's worth, right? And so I'm either going to ask way too much or way too little, and I'm going to look like a fool either way, right? And so I just won't, I won't even start the process because I don't want to kind of ask too much or too little, right? I have no idea what it's worth. So it grounds you in some range of that valuation and allows for you to engage with buyers, but then also the asset's only worth what you'll sell it for and what a buyer will pay for it. And so by listing anonymously, you can get a sense for the market around that book. So I think what you were talking about is like, one, I think we help with valuation right now, right? Like you can get a valuation, either a gut check valuation, and it's a very robust tool, but again, we're making some assumptions. So that's why I call it a gut check. Or a dollars and cents valuation, through our industry partners that have been doing this for a long time, right? And we'll sit with you and talk to you about it. You can also list anonymously and engage with buyers anonymously. And then if you find someone there, you have a platform to run that deal off of in the deal room. And yeah, so we're excited about where we're at now because we've already we launched start of this month, and we're cresting over 700 users right now, and so we've got so it's been great. It's been
incredible.
Almost all organic. It's we've worked
awesome.
we worked really hard to attach ourselves to the right folks, like Abby, Bradley and Scott, talking to you, right, like getting of the industry and with the right folks that are talking to these agents. And talking to agents ourselves, but making sure that that the vast majority of the folks on there are either folks that are currently independent agents or people that want to become independent agents, right? So you're talking to fellow agents about that asset. And that's another key piece of Cake, is that we don't want to replace the hubs, the actuaries, the e-groups. That's going to be fine for the folks that have that option, but we want to build another option where you can transact that premium, that customer, that agency within the independent space and keep that asset with an independent agent even after your retirement, if you're retiring and selling the full thing.
Dude, wow. That's congrats on 700.
Thank you.
That's a lot. I mean, as far as individual agencies going on and listing businesses to... Now, is this to sell or buy?
Yeah,
this is buyers and sellers? I was like, man, 700 agencies already trying to sell?
Oh, my God. We had 700 agencies to sell.
Right.
I'd have a champagne bottle here spray, because that's the biggest piece that is to solve, is to help sellers kind of trust the platform and trust there. happy to talk a little bit about that. But
Well, so before we do, because I think here's what's really unique about, other than the idea itself. I think the idea of cake is just phenomenal. If you didn't do it, somebody was gonna do it. But I love that you guys did it. What's interesting though is that you guys, I think, have and correct me where I'm wrong here, but maybe an opportunity to come out with, that valuation piece, right? It seems like that's kind of tribal knowledge in the industry. Oh, well, you got to go see this person at this bank, or, and everybody's got a different way of doing it. How do you really know? And that's why we love people like Carrie Wallace, because hopefully she comes in unbiased and or maybe leaning towards the seller in that situation and helping them get the most out of what they've built. And so, but to, one-off consultants all over the industry it's still tribal knowledge. For you guys to almost, take what's in Carrie Wallace's brain and put it and scale it, right? There's something to that, I think. There's...
Yeah, it's like, it's like not knowing what your house is worth. I mean, I've used this analogy other places, but it's like the Zillow, right? Like being able to say...
Imagine if you didn't know what your house was worth, though, for just a second. Take that
that's a
pause.
Huge asset.
That's insane. Imagine you built your house and you have no idea what it's worth today. I mean, that's really, I guess, how insurance agencies are walking around in the industry. Sorry to interrupt.
No, you're fine. But to like be able to go and say, these are the things that are impacting my value in a positive way. These are the things that are impacting my value in a negative way that maybe I can address, right? There's going to be some things like you can't address, right? Like if you're in Mississippi and you're talking to an agent in New York, they might not have a great understanding of the coastal insurance. New York's got its own stuff, so it's probably a bad analogy. Say Iowa, right? But then you're able to aggregate all of the coastal insurance agents that do understand that, the unique pain points, the unique opportunities.
Right.
That's where you can start to track the things that are positively impacting, negatively impacting that you can address, but also see comps, right? So a house with 3 bedrooms, 2 baths in this zip code sold for this amount, right? Yep. Like then you're not like thumb in the wind, right? Like this is what the valuation is. It's like, no, this is what the market has said it is. And like you were talking, vision and mission versus current days. It's like we can give you a really good grounding. Vision and mission is if these are transacting on our platform, we can then expose that data back to the agent and say, this is like inarguable. You know what I mean? Like this is what they transacted for.
Yeah. I mean, I guess not only is it tribal knowledge, but it's also not transparent, right? I mean, and then I guess the question is like, how do you trust what someone's telling you at the end of the day?
Yeah. I mean, I ran into that problem myself because I was like, I was getting into this and I was like, oh, this is a highly regulated industry. And like, there's going to be reams of data where we can just take transactions over time and push those through a machine learning model. And we can very quickly come up with a evaluation tool. Not so, because like the only things that are like reported are the, $325 million acquisition of like big group A over big group B, right? Or even the $50 million acquisition of the, $15 million agency here, right? But like that's like me trying to take Amazon's valuation and use it as like a barometer for my marketplace's valuation. It's we're talking about two different beasts here, and so to keep it at a really targeted, agent level, like the agent size that we've talked about, and say, look, you can talk about these data points, but we're here. We're focused on you and this size agency and the ones like you. These are the unique value, pieces that are driving that value. And these are the things you really need to watch because you're either falling, slightly behind or below industry averages here. And this is where you can address it. Think about that knowledge 5-10 years before retirement. I've got time to make changes, and like maximize that value. That's a cool moment if I'm able to give that knowledge back to the agent to say, okay, now I know what I'm driving towards.
Right. Like there's almost a sense that because it's easier to get a valuation, even if it's a gut check, and to know how to increase your valuation easily, because now you've taken the barriers to entry down on that. Now you have given more opportunity to agencies to do this sooner, which means they can put, because, I assume that most agencies don't do it because of some of the things you talked about before, right? They just maybe aren't ready, or they don't want to admit that they're ready. But part of it probably is just the process itself is hard. And so if you make the process easier, more people will look at it sooner, which means more people can fix the problems, which means they can get ahead of and increase their valuation, which is awesome. That's awesome. Yeah. In theory, right?
Yeah, in theory, right?
Yeah.
And there's a lot of work to make it easier. I mean, like what stuff that we do right now is like sellers, like one, you're anonymous, so no one has to know that you're interested in selling, and you may not actually be actively interested in selling. You may just want to see what someone would pay for it. But also, like, marketplaces do one of two things to get going. They either seed transactions in the space, right? So, for example, like the Airbnb guys, they listed their own apartments, own houses, on Airbnb early so that there were, places to stay at the jump of Airbnb, right? So you kind of seed like fake supply or fake demand. Or you take what will be an automated process and do it manually on the back end, right? And so sellers can do the listings if they want help with that. My team is there to we'll spend as much time as you want on video calls or phone calls to help kind of guide you through gathering that data, how to think about the different slices, et cetera, to get those. And so, there's help there, but I'm also really encouraged by, the fact that we're on the Vertafore podcast. We've talked to some folks that applied at Hawksoft, some of those places, because I'm really interested in integration with the AMS systems for two ways, right? Like in my AMS, like list on cake, value on cake, but also when that transaction happens, ingest into cake, right? So I just bought this book.
Right.
It now needs to go to my AMS system. So, I think that's where there's we're fresh, right? We're a month into this being live, but we are pushing those integrations to try to make it easier for buyers and sellers to just say, hey, here's my data, give me a valuation, list these portions of my business, or I just bought something and need to ingest it.
Yeah. See, now if I knew this was going to be a pitch for you to integrate with Vertafore.
Yeah, right. I had to slip that in.
Listen, I'm here for it. That's what I was thinking, was that at the end of the day, the agency management system is the source of truth, right? So you guys are operating off 6 data points that have to be manually entered. How awesome would it be if it was, 100 data points that were automatically pushed over, and then the algorithm just goes in and says, okay, based off, and I'm sure we can get to a more accurate gut check, right? Maybe still a gut check, because we love Carrie and we love, she's always going to do things with a fine-tooth comb, but
I've always described that as like, my pitch to Carrie was, hey, what you do is art and science, and I'll never be able to replicate the art. But I can make the science part easier, faster, and more robust to enhance the art part.
Yep. Well, consider me pitched.
Yeah, there you go.
That's awesome. Okay, so before we get into future state, you mentioned that, and this is the most intriguing part to me, other than the platform itself, this cool valuation tool that you guys are building, the fact that you allow agencies to sell parts of their books of business. So here's what's so fascinating to me about that. I think about, enterprise agencies' ability to scale, and a lot of it, how do the big keep getting bigger, right? A lot of it is operational efficiency, and there's some organic growth there, but mainly it's acquisitions, right? And the ability to scale those acquisitions. To take in a whole agency is a lot of work. It's a lot, because you're talking culture, people, habits, technology, buildings. Oh my gosh. I mean, we could go on and on and on, right? So if what you do though is say, well, we have an agency here and they love, they absolutely love roofers, right? For whatever reason, hard risk to write. Most agencies, kind of shy away from roofers, right? But for whatever reason, there's a couple agencies out there who are in the construction industry who have a couple roofers but don't really want them. Okay, well, we can go on to Cake. We can take that group of accounts. We can list it. We can value it. And then we can move it over to the agency who's probably just going to do a better job with it because they want that risk in the first place.
And it's a triple win usually, right? So you get dollars, they get growth in that niche, but then the customer also gets better rates, better service. Like you picked roofers. I talk about commercial trucking a lot. Like, you've got, if you don't have your processes set up for like, proof of insurance or COI stuff, like that can drown you in just the service work of that, right? And so the juicy commissions on commercial trucking kind of sucker some people in, but then you get into the operations flow and it's really hard to manage those. And so just like you said, right, like you can slice that off and sell that to someone there, but then ultimately the customer typically gets better rates and better coverage, and also that reduces that risk of churn in that transaction because they're going somewhere that is like a really good agency and it makes sense to them why that was transacted. But yeah, like the fractional side, to me, it's all about optionality. So I think niche is a great one. I think also though, like one of the amazing things, right? I think the saying is like, if you've met one independent agent, then you've met one independent agent on like how they do things. And that like has held true, is like everyone has a different strategy to win, which I think is beautiful because it creates this like community sense instead of like a competitive, sense, like an antagonistic sense. But you also, like, that changes over the course of a career. I was in manufacturing, thought I was, going to be in manufacturing for forever. Now I'm in insurance. Well, an insurance agent might write a ton of business with one carrier, and then something changes within that region and they end up rolling over some of their book to a new carrier 6 years later. Now they've got 10% of that book that like couldn't go in that book roll, just kind of sitting there, right? Well, you could slice off that piece of your book because you're not really engaged with that market or that carrier anymore, and access that capital and then reinvest that in a different, in like the new strategy of your agency. So like right now, that's a great way to access capital. Now, future state, we're talking to some of the major lenders in the space and want to, expose lending as part of this transaction.
Oh, interesting.
To help with that underwriting.
Interesting.
But, if you want to just be able to access that liquidity by saying, this 5%, this 10, 15% of my book, right, doesn't make sense for the vision of my agency moving forward.
Right.
And then I'm going to take that capital that I gained from that sale and reinvest that in a slice that does make sense, or reinvest that in a new AMS system, right? I want to upgrade or access other technology, right? Like it just gives optionality back to the agent. But then it also, like if you're transacting on just those portions of the book, it makes it much more likely that a fellow independent agent can tolerate that transaction, both from a capital perspective, but then also, like you said, if you're a $150,000 agency buying another $150,000 agency, that's a huge transaction to make, to try to ingest that full, to merge those two.
Yeah.
But if you're buying $50,000 that makes the most sense for your business, then you're accessing those efficiencies, because that's the stuff you do really well.
Yes, right. So that's what I was thinking, is that the enterprise agency has, because of the economies of scale, has figured out the efficiencies by in buying large, or not large agencies, but mid-size agencies. They've just figured out the equation, right? It's much more difficult for a mid-size agency to do that when buying other mid-size agencies. But to me, there's an economy of scale there. If they can go in and say, well, you know what, we don't need the people, we don't need the building, we don't need all that, but we'll take that book of business that aligns and complements our strategic direction.
Say you got 4 of those, right? And they all want a different piece of a seller's book, right? I can maximize value for the different chunks of my book to 4 different buyers and still have that exit moment. So it can either say, I'm retiring and I'm going to have multiple buyers that want different pieces of this book, right? Or I'm early in my career and I want to get into commercial lines, and so I'm going to, get off a few carriers and personal lines to invest in a slice of inorganic growth in commercial lines, because organic growth there is hard competitively, and I want to, get market traction.
I mean,
so it's flexibility at all stages of that career.
I think, to me, that could also be a product that goes outside the independent model. Like, to me, you guys could be a funnel that sits in between, captive model, direct model, and independent model, and goes to, Geico or State Farm or whoever to say, hey, look, if you guys have parts of your book of business that you don't want, we'll figure out how to offload that for you. I guarantee that there's some opportunity there.
Yeah, it hits. I mean, I've talked to some of the top 50 brokerages, right? I mean, I know that when you look at your book, right, at the end of a year and you're auditing it, you're like, how did 5% of this get here? Because they're so big, right? And so it's like they've got stuff, and like for them a $5,000 small commercial policy, it's almost it can be like a little like that's too small, and it doesn't fit within our operations.
Right.
But a $5,000 commercial policy or a bundle of those to an independent agent that like really hammers that, right? Yeah. Like that's a really valuable asset. So even the top 50 or the top 10, whatever, they could slice off parts of their business, and that customer could end up with someone that is so excited to have them, instead of you were talking about how they figured out operations or efficiencies of scale. I think part of it is just that they say, I'm gonna maximize the types of policies with these carriers to get into rev share. Well, now you give that back to the independent agent to say, I'm going to hammer my relationships that are really good relationships, and I'm going to really focus on growing there. And so, now that's a really efficient buy for me, because I know that I'm strategically growing there to access that efficiency, right? So it's just different levels of it, but it gives the same tools, or attempts to give the same tools to agents. I think there's a lot of stuff to figure out there. Commercial lines are way easier and cleaner to slice off than personal lines. Full carrier books are cleaner, right? But my view is like kind of free market view. If you want to sell it and list it, there might be a buyer that's willing to engage with you on it, and it doesn't hurt to try to find those folks.
Right. Well, and I think it's going to be interesting to see from a valuation perspective if you can put a number on a slice of a book of business. Because obviously we have, to the tribal knowledge point, we have an understanding of how to value an agency, right? We know what to look at. There's sort of a, at least in some of the banks and PEs, like hey, here's what we've done in the past, and here's what we believe, et cetera, et cetera. But a slice of a book of business, that's That's a little different. That's interesting.
Yeah,
Right?
this maybe you were talking about, I bring a new perspective.
Yeah.
I view that as easier because
Oh,
it's just
interesting.
numbers,
Yeah.
like
Yeah.
it's just numbers. It's like you take out all of the EBITDA conversation on a
Sure.
book,
Okay.
right? Because their operational efficiency
Right.
is irrelevant to your operational efficiency.
Right.
And
Right.
so you're just looking at, if I added this revenue that is generated off of this premium to my book that at current day produces these numbers, right? Then the numbers after that transaction are this,
I
right?
see. So
And
that's
so,
okay. So that's why you were talking about it being more of an access to capital for the seller of the slice, as opposed to they're not going to make a huge profit margin off of this, right? It's less about
well,
that.
I think the multiples actually still, so like the tribal knowledge on multiples is like revenue is somewhere between like 1 to 4 times revenue,
Yep.
right?
Yep.
EBITDA is like a huge range, and that's where the agency, it's actually pretty complicated, I think, to value a full agency. Now, if
Yeah.
you're just looking at the book right off that revenue, and the reason that you go revenue is because like people have different commission rates with carriers because they have a stronger relationship or a less strong relationship. They're in profit sharing, right? So then you say, okay, off this revenue, depending on the carrier, the state, the line of business, how big it is, right? Um, how kind of clean it is from like a non-compete perspective. This is where you fall on the multiple range for revenue. And so I still think you can get incredible value for that book of business. It's just what I was saying is that what I've heard from agents, right, is that like the reason you would access that liquidity or that capital to reinvest is because strategies change over time, and so it's another option for lending, right? Not that you wouldn't get great value for it, because ultimately, if you're a 1 or 2 man shop at $150,000, your agency looks more like a book than a full agency, right? But yeah, like I think the book, you can still get a really good multiple off of it, potentially seeing like what the value points are, but it allows for like a cleaner view of like that, because it's just numbers around that.
Yeah.
It's not like the like age of the agent or their
Right.
a
Right.
lot of times like the who owns what in the book, right, of like the full agency, what's the debt within the agency, what's the stock split and ownership split, right? It's like we're just looking at the book. So if you own that book, you can list that book and we can find you a value or a buyer for that.
Oh, I'm imagining the possibilities of, showcasing how when you sell a book, like how does that relationship transfer, and sort of best practices on that, and showing performance of the book post sale. I mean, there's just an endless, I think, amount of opportunities with Cake there. So tell me a little bit about where you guys are headed as we wrap up here. So we know where you guys are at today, which is leaps and bounds ahead of what I think most people probably thought. I honestly, coming into this conversation, I thought you were just making the connection. So hearing that you've got the valuation piece, you're thinking about lenders for books of business. I mean, that's just fantastic. What's next? Where are you guys headed next?
I think 2 things. One, I touched a little on the deal stops at the deal room. Well, in the next 6 to 8 months, we'll have a happy path transaction that we'll be able to say, full suite of tools if you fall outside of this happy path, right? But if you're transacting on, a carrier book that's really clean, or a line of business like a niche that's really, that we're just transacting on that, you'll actually be able to like check out on the platform. So money changes hands, right? Like that lending becomes a big piece. Or, maybe it's a $50,000 transaction. It's like one of those slices. So you'll actually be able to have like an on-platform transaction. The pieces that attach to that I think are more integration side is, one of the things we were pushing, like I said, is integration to AMSs, but also like the the transfer of that data. I think that a lot of times we'll look at pushing automated, by integration, but also offering, I think more efficient ways of doing something that happens today, right? So you just bought something, let's transfer that data and ingest it, or let's help you get that out of that book. Where that ties into, and I think this is just something, this is kind of fresh for this podcast. I've been talking more one-on-one with folks, but really where I'd like to get with agents is that your book is something that lives on cake, right? Like the view of it from an anonymized standpoint. Because of those slices,
sure.
Right?
Yeah.
There's stuff in there that you would sell for a dollar amount.
Yes.
You don't think about it like that.
Yeah.
Right? You don't think about it like that, but you would sell it given the right offer, right? And so having a view of your book where you can say, suppress this, I would never sell this. This is like the cornerstone of my business. And then passive listings, right? I don't know if an offer came across my desk, be something I'd be interested in. And then active listings, right? So things I'm actively trying to sell. I think that view, right, it ultimately helps the agent. There's more comps on the valuations that you can visualize, right? And it's all private. No one's seeing your book that's tied to your name. But then also, it's something where, hey, I had no idea that I was going to get off workers' comp, but I got an incredible offer for it. Yes, I will transact that, even though I wasn't thinking that I was in that seller moment. I think in that view of cake and where we're driving to, sellers and buyers, the line kind of blurs, and you see more frequent fractional transactions that are strategically oriented towards the different stages of an independent agent's career. So yeah, I think that you'll ultimately see. We've talked about like the Zillow, right? Like right now you get the valuation, but like that valuation and insight living underneath that book. Yeah, those like that. That's where I think the more we can earn agents' trust and they know that we're doing this the right way.
Right.
We're not selling your data. We're more so like saying, let's bring everyone, the whole community here to say, if you're looking to sell, here are all the buyers. If you're looking to value, here's the insights comparatively. And if you're looking to buy, here are the slices that are available.
Yeah.
But it's aggregation of that information and then mirroring that back to the agent so that they have access to it.
Yeah. Yeah. And maybe even like real-time recommendations on valuation and performance improvement too.
Well, especially if we have the book on there. When a slice hits, right? When a slice goes up for sale, we can say, hey, 1 + 1 = 3 here. You should buy this, right? Like this fits with you so well. And so that's that like matching and recommendation scores, which John on the machine learning side will continue pushing and building out that suite of insight and tools for agents to have. But yeah, I think it's just, we want to make it super easy to transact, but we also want to make it really easy to understand the value of that asset and understand how to impact that over time. Those are kind of our two big pillars that we have as we push this thing forward for independent agents.
Yeah, that's fantastic. Okay, so for those listening, how does somebody get started? What does getting started look like? If they're either interested in looking at what's out there to purchase, or if they're interested in valuing their agency and potentially looking for some buyers, can they value the agency without looking for buyers? Is that something they can do too?
Yeah, so the tool is separate from the valuation tool is totally separate from the listings. It's in the platform, and so you could just play around with that without listing your book. We wanted to make sure that we're not trying to like bait and switch anybody to get them to list. It's like that tool is honestly for informative purposes. So www.haveyourcake.com, create an account. When you get into the marketplace, you can either list, you can, play around with the valuation tool, or you can view active listings. And we don't ask anyone if you're a buyer or a seller yet. Now, there are some tools like buyer profiles that we're working on that allow sellers to work with one specific buyer and buyers also to kind of tell their story. And so then you'll have to kind of toggle on what stage you're at, like what you're looking for. But yeah, so www.haveyourcake.com, create an account. You can list, you can view listings, you can play with the valuation tool. Right now, actually, the platform's free. So the buyer profiles would turn on subscriptions for those buyers that want to kind of be actively buying.
Yep.
And then when we launched the on-platform transaction, I was talking about the money changing hands. That's in around 6 to 8 months.
Okay.
That's when sellers won't pay anything until they transact, and then when they transact, we'll take around 1% of that total transaction value if it flows through that happy path. But
gotcha.
If you're transacting on a full agency, we're more so like along for the ride at this stage, because I firmly believe a marketplace can only charge for the services it provides.
Yep.
And so when we process that transaction, then I have a right to take a little percentage of that transaction. If I'm not processing the full transaction, I'm only going to charge the buyers because they're getting access to our suite of tools. But it's not, I'm taking a percent of the total transaction. So ultimately, I think that we're a great partner for agents that are looking to, retire, because you get a view of all the buyers in the space, and you're not really having to pay that 6 to 12% of what a broker would ultimately charge you for something there.
Awesome. Wow, that's awesome. Okay, great. Well, for those of you guys listening, listen, there's a lot of insurtech companies out there. Adam and his team have, I think, built something that's very unique and creative. They're 18 months in. They're actually part of 101 Weston Labs, which is a insurtech accelerator that's funded and run by the North Carolina Insurance Association. So Avi Knight, the CEO, Pat Klein, who now runs 101 Weston Labs, big advocates for the independent insurance agent, and two people who I think would, give their both thumbs up for Adam and his team at Cake. So if you can, go to haveyourcake.com. If you're interested, sign up for a profile, check it out. I think giving them that support, no matter if you buy or sell or do anything, just check it out and see what it's about. I think that goes a long way in the independent space for furthering innovation and everything that Adam and his team are doing. So Adam, thank you so much for coming on. We really appreciate it. And I hope to have you guys back on in a couple months when the future continues to evolve.
No, I love it. Thank you for giving me some airtime to talk about this. We love it and we're excited about it, but this is the lifeblood of a startup, to just have a platform to shout at the mountaintop. This is what we're doing. So thank you very much.
Hey, if you want to catch the next episode next week, hit that like button, hit the subscribe button. You can find us on any podcast platform. If you want to watch us, we're on YouTube. If you want to listen, Apple, Google, Spotify. We hope to see you next week.